Sameer Shah, CFO at GCPL, joins in to talk a little bit more about the quarterly performance. Thanks much for taking time out. To begin with, the India branded volume growth has come in on the back. It has come in double digits. Do you think it's safe to say that the worst is now behind and that this growth is sustainable for FY24, both in terms of volumes and revenues?
Well, I think we have had a good quarter. Q4, if you look at overall performance, as you called out, branded growth in terms of volumes was 13% and sales growth was 16%. It was also very broad-based growth. Both home care and personal care did see 14 and 17% growth respectively. And even the subcategories within home care and personal care did see a double-digit growth. I think these growths are coming driven by category development initiatives, which we have been executing over last 3-4 quarters, and we do believe that building on the category development initiatives momentum, we should continue to see relatively stable as well as strong growths in FY24. Though one thing which will change a wee bit in FY24 compared to FY23 is the pricing-led growth, which we had in FY23. Perhaps we won't have it in FY24, but the volume growth momentum, we do expect it to be much better in FY24.
All right, that's good to note. Now, your rural segment accounts for 30% of sales. What's the outlook in terms of rural versus urban growth?
We did see recovery in rural because one of the reasons why rural consumption was slow was because of inflation, and now with inflation tapering off in some of the staples within FMCG, we are seeing consumers coming back and driving growth. So we did see a relatively better performance in rural as compared to some of the previous quarters. My sense is we should continue to see this momentum going ahead also in rural consumption. It's also going to be an election year. There could be some social welfare spendings, which should also result in higher consumption generally for staples within FMCG.
Right. Sameer, given the correction in palm oil prices, which has supported your margins and the EBITDA at about 20-odd%, would you say this 20% level is sustainable for the full year?
Yeah, again, directionally, I think the shape of our P&L, the quality of profits will be excellent. We do expect increase in gross margins going ahead, driven by low commodity prices as well as a favorable category mix. We expect equivalently media investments also to go up because they have shown, some stellar results like we have seen in the last quarter. We expect the basket of what we call as controllable costs to continue to come down. So cocktail of all of this should result in expansion in margins. Difficult to call out whether it will be 20% plus or not. But for sure, the FY24 EBITDA margins will see meaningful increase as compared to FY23 EBITDA margins.
Right. So do we view this as a turnaround quarter for home care and especially for the HI, given the double-digit growth? And can we expect a higher growth trajectory sustainably from here for the segment?
It has been an amazing quarter. Largely for all the categories in home care, both air fresheners as well as household insecticides have done extremely well. We did see, strong performance in household insecticides, and it's not driven only by one quarter's input matrix. Those have been in place over the last 2-3 quarters. Maybe we have started seeing, traction driven by those initiatives in terms of end results in last quarter. But going ahead, we do expect, a reasonably steady growth momentum in household insecticides on a full year basis. Some of our input matrix have been in place. Some actually got in last quarter, like launch of mini FIK, launch of mini electrics. So we do expect, FY24 to be in general a good year for household insecticide category also.
Okay, let's talk about the other internals as well, because if I want to talk about the competitive intensity in the soaps business, we have seen that there were some price cuts that were taken in the month of October. But going forward, what should we expect with respect to pricing in the soap segment?
Well, not much. At this point in time, we are seeing a lot of sanity, in the overall soap category, right from small players to large players, and we expect it also going ahead. It all depends, on the palm oil derivatives prices, which have been quite stable, by the way, over last, I think now 3-4 months. So depending upon the palm oil derivative prices, the end consumer prices will, kind of move around. But right now, it has been quite stable. The competitive intensity is also quite, stable on that front.
Sameer, the growth in Africa has been quite weak, and that's because of the Nigerian business seeing a bit of a slowdown. Have things normalized now? And
or we're going to see this continued weakness in FY24 as well?
No, I think it's behind us. I mean, Nigeria did see, I mean, election and demonetization impact, as a result of which the overall Africa performance did see a little bit of pause in its double-digit growth momentum of last, I think, 12, 13 quarters. But it's behind us. I mean, April was a very good month in terms of not just recovery, but generally coming back to norms. And the start to May also has been equally good. So yeah, it feels like behind us. We should be back to our double-digit growth momentum even in Africa in FY24.
Okay, but moving away from that region, let's talk about Indonesia, because that also seems to be returning to growth. What is the difference in between the primary and secondary sales now, and do margins here look sustainable?
I think it's largely in place. There's not much of a difference between primary and secondary sales since last couple of quarters. Only we had a hygiene category in the base, and this I think was the last quarter of it being in the base. So to that extent, the overall growth ex hygiene category were I think close to around 10-11%. So that also is a good news. We do expect this growth momentum to continue in FY24 again on a low base also, but also driven by a lot of distribution initiatives, category development initiatives, which we have seeded in over there. Because of scale benefit and also because of softer commodities, we do expect margins momentum also to be equally good. So Indonesia also will see, I mean, a good kind of overall business performance in FY24 as compared to what it was in FY23 or even in FY22.
Okay. And moving right on, finally, the acquisition of Raymond Consumer Care business. When can we expect to start seeing synergies from that play out?
Yeah, it's still too early. I mean, it just got completed a couple of days back, but we do expect, I mean, synergies to start, kind of getting executed over next 3 to 6 months. The results of which will be seen, my senses, in second half of the year, maybe the last quarter of the year. But I think the bigger, I mean, synergies, especially in terms of results, will be seen in FY25, which is, next year, wherein we do expect a double-digit, kind of sales growth and margins also, reading close to, say, mid-20s from a mid to high single-digit margin, which the business had historically.
Right, Sameer, great to have you on the show today. Thank you for joining in, and once again, congratulations for a great quarter. GCPL, of course, is holding out in trade, but